So guys, I hope you had a good trading session. As far as I'm concerned, I traded today, but I was not very active in trading. I did trade with a relatively low position size, and also the premiums that I was targeting were not very high. So today I just wanted to keep like a very quiet kind of a day. I did not want it to be much of a drama, so to speak. And the market did do a lot of drama, as you can see the way market moved, went up and come down. And so this I did not want to do too much of this. Why? Number one, as you guys know, that we are migrating towards a more automated way of trading, right? So for that there is a backtesting going on, and I talked about this last month, and I was hoping that by this time we would have already migrated, but somehow I did not account for the time that it takes to genuinely do some backtesting, not just superficially. We have to genuinely do some backtesting, and we have been encountering some issues, and technical issues, and even logical issues. So we have to we have to encounter that. We have to figure that thing out before that can be put into practice. So I'm really still hoping that we can still hit July. We still have a couple of weeks to go in July, so hopefully we can do that. So I will talk about today, but I just want to tell you guys a couple of things about backtesting, because I believe that it will help you in doing your own backtesting. So one of the ways people do backtesting today, or at least that's what they think should be done, is they come up with some of these ready-made strategies, right? So you keep hearing about short strangle or short straddle or this and that. And now there are websites such as stockmark.com or QuantGym and all these things. So the general consensus is that, all right, so let's run a short straddle or run a short strangle at 9:30, 10:30, God knows what time, and then figure out what should be the stop loss, and based on that, that's the approach. That's what people believe should be done when it comes to backtesting. But in my opinion, it's a very non-intuitive way of doing backtesting, right? So instead of starting from a strategy, every trader should first go through one round of exploration, and that is what we are doing right now, right? So what is exploration? Exploration basically means that, okay, forget about making money for a second, keep it aside. Just try to understand what is the nature of this market, what is the nature of this index, whichever index you want to trade, Nifty, Bank Nifty. So for example, what is the typical range of Nifty? What is the typical movement of Nifty on an intraday basis from the lows to the high? What in the past? Take a look at the data of the past, let's say 3 years, 5 years, 10 years, and see what has been the trend, how much typically Nifty moves, and what is the behavior of Nifty when it is a gap up, what is the behavior of Nifty when it's a gap down. And there are different gradients there, right? So it's not like every gap up is the same. A gap up of 2% is going to behave very differently as compared to, let's say, a gap up of let's say 0.5%, right? So once you see the market the way it is, rather than the way you want it to, it will become easier for you to slice and dice the different setups, right? So the different setups means, so how would you trade when the market is bullish? How would you trade when the market is downtrending? How would you trade in case of a gap up or a gap down? Or there are different setups, or you can probably identify, let's say, different scenarios, and then you see, okay, all right. So let's say you have a day which is in an uptrending market, right? So now that you can see that, okay, so for a uptrending market, what kind of strategies typically work? So you can probably now think about, okay, for an uptrending market, it makes sense to sell put options, and then you probably can look at how far the market has already moved in the past subsequent days. Based on that, it will make a little bit more sense to adjust your position size. So I think that is the one thing which I have been observing, that a lot of people, they do not do. They see the market as one homogeneous market past 3 years. But if you had been in the market for the past 3 years, you know that it is nothing but homogeneous, right? We had a time where market was extremely bullish, just every dip was getting bought. And then we had a time where the market was coming down drastically. And then we had a time where market was doing nothing. So you cannot take one strategy blindly and start applying it on every type of a context. You need to break those different scenarios down, and then based on the scenarios you can now do, okay, let's say if I do let's say a bull call spread on a certain day, how would that work, right? Or if I do a short strangle on certain kind of a day, how would that work? And then see those cases wherein it did not work, right? You made a hypothesis that yeah, this logic should work, but a lot of times the market doesn't behave the way we expect it to. So what went wrong? Did the volatility kill the game, or was it the time decay which did not happen the way you are expecting it to? So then if you drill down and then you find out where the issues are, and then of course you figure out some corrective action. So let's say, for example, we tried one strategy where we were only selling options, and then we realized that if you pair it with option buying, it kind of compensates for some of the issues that we see are faced when we are only selling options, right? So when there is a momentum, for example, it's very hard to make money just by selling options, or if you probably will not make enough money in case you are chasing a momentum. So anyway, so that's what my point is, that please, when you are doing backtesting, don't do it blindly. Look at the data a little bit more closely, and then see in which market context what strategy would have worked, right? So that's just my two cents for any of you who is serious about doing backtesting and anybody who is serious about making money. So anyway, so coming to today, I was not very active. I don't want to trade Nifty anymore. I mean, I don't want to trade it a lot. I do want to trade Bank Nifty. That is why I'm getting a little impatient. But God knows when that time will come, hopefully soon. But today was just a very typical kind of a day. First thing first, market rejected 16,500 right away. Though it came down to test it a little bit first, but then again it got the buying that it was planning for all along. So for me, it was not that big of a deal. I mean, today I made a couple of mistakes. So this is how the PNL was fluctuating. So today actually I made a couple of mistakes right there in the morning. So 40,000 rupees straightforward the loss went because of my order entry issues and something which I did not pay attention to. So order entry as well as my stop loss setting, I actually made some mistakes. So I had to pay for that, but the rest of the day, it was very much in line with what you would expect on a day like this. So stop losses were getting hit. I was adjusting the position, and pretty much everything worked out fine. The one thing which I will say was definitely a little surprise was the move that happened after 3 p.m. because and that was actually interesting, because if you look at the 16,600 call option, 16,600 call option, let me actually show you guys here. 16,600 call option at one point around 3 p.m. it actually came down to 0.3 rupees, right? 30 paisa. From 30 paisa, this option went up to 5 rupees, right? So people talk about expiry day lottery. This is a perfect example of expiry day lottery. Right? So let's say you would have put, let's say, 10,000 rupees. You would have bought that option for 10,000 rupees. So 5 rupees divided by 0.3, so 16 times, right? So your 10,000 would have gone up 16 times, right? This is how crazy these expiry day moves sometimes can be. I did not do it. I absolutely did not do it. But then I was surprised, because normally an option that goes to around 2 rupees, less than 1 rupee, it's very unlikely for that option to make any money, right? So this is a little one thing which stood out today, the big move which happened after 3 o'clock. And these moves, they don't happen every time, but when they do, they are spectacular. I'm sure something similar also happened on Bank Nifty. But on and all, it was a very predictable kind of a market. There was volatility, but it was not crazy volatility. It was manageable volatility, which I guess can be managed. So this is how basically the day went, guys. Nothing much to report here. So with that said, guys, I'm just going to wrap this thing up. I'm hoping that you guys also had a good day. You were able to make some money, and at the very least, you got something to learn.